Well, let's stick with equities and to the two big private banks that have announced results so far. Federal and HDFC Bank have both exceeded expectations. HDFC Bank posted a loan growth of 23%. Federal's loans grew 20% in the second quarter. Both banks reported a 10 basis point rise in their net interest margins. Both improved their return ratios. HDFC Bank's return on assets grew 20 basis points to a massive 2.04%. I mean, that's a huge ROE. Federal's ROE rose again 10 basis points to 1.21%. Very good growth even by Federal's past trajectory. Now, is there enough in these numbers to make the market expect an even better performance from other banks that are due to announce numbers like ICICI, SBI and a whole host of other banks? What are the hot favourites to watch out for? And will this bonhomie extend to PSU banks as well? For all these, I'm joined by Suresh Ganapathy, the banking analyst at Macquarie Capital Securities. Suresh, thank you very much indeed for joining us. We normally call you at the end of the results season, but because these two results were so good, we thought we would benefit by getting your advice earlier before the bulk of the numbers come. HDFC Bank first. Are the numbers even better than you expected?
Yeah, so if you look at this quarter, Lata, I mean, there has of course been a repo rate increases during this entire quarter, and we definitely expected loans to reprice faster than deposits and a margin expansion. So the margin expansion came in line with our expectations. But what has happened here is that despite the high treasury losses that HDFC Bank reported this quarter, they still managed to report an overall ROA of about 2.04 or 2.1%, depends upon the way you calculate. So that's definitely better than expectations and clearly shows the strong operating profitability that all these banks are likely to have this particular quarter.
Yeah, we were all expecting lower credit costs. It is just that the loan growth appears to be even better than one expected. And, of course, margins uniformly higher for both Federal and HDFC Bank. It's the ROA that takes your breath away for HDFC Bank. Because of this performance in the ROA, which, distills everything, would you raise estimates for something like ICICI or Kotak or SBI? That's still to announce.
No, we cannot, of course, give any forward-looking guidance at this point in time, Lata. But having said that, let's put it this way, that we started off the year with almost 50 basis point rate hike. That was the initial expectations and everybody got it wrong. And by the end of the year, we would be starting at closer to 250 basis point rate hike. During this entire rate hike cycle, the one sector which has actually not seen earnings downgrades, in fact, on the contrary, has seen earnings upgrades is financials, particularly banks. So I think the positive earnings momentum will continue. Let's put it this way, that the downside to earnings for the banking sector coming from a sharply rising rates, or for that matter, slowing down of the economy, is relatively much lower compared to any of the other sectors in the economy.
Okay. What's your hot favorite? I mean, I think IndusInd Bank, we are running your EPS forecasts. IndusInd Bank, there's a 50% jump in EPS. Even Axis, I think it's a near 50%, about 45% jump. Would that count as your hot favorites?
So my topic clearly going into the results was IndusInd Bank, and in fact, even from a next 1 year perspective, IndusInd Bank still remains one of our topics. I mean, the way you should look at it is the fact that they were still running at 2% kind of a credit cost as of the previous quarter, and that's way high, right? And with the fact that you're seeing quite a sharp uptick in cyclical sectors like microfinance and commercial vehicles, which is where they're predominantly present, you're going to see a sharply declining credit cost, thereby giving a boost to earnings. So much of this earnings increase that you're seeing specifically for IndusInd Bank comes in the back of very benign credit cost environment, and that is expected to continue despite rising rates over the course of next 2-3 quarters.
1 minute, what did you say? MFI earnings also have improved. In that case, Bandhan should also benefit. No, why is it a miss?
Of course. I mean, okay, so Bandhan had that issue of near-term floods and, restructured portfolio, but slipping into NPAs, and those kind of issues are specific to Bandhan. So it's a very Bandhan-specific issue rather than, say, a general microfinance issue.
Fair enough. Okay, the one that is missing in your list of forecasts are PSU banks. I mean, BOB has found its way into several, brokerages, and including foreign brokerage analysis. Would you extend, I saw SBI in your list. Would you extend coverage to other PSU banks? Do you have a positive stance on any of them?
Okay, so largely, I think Lata, it makes sense to stick with the large PSU banks, both SBI and BOB. Of course, we cover both of them. We've actually largely dropped coverage of the other PSU banks. But
Okay.
having said that, I do believe that this may not be a short-term call or a near-term call, but over the medium to longer term, I do believe apart from SBI, all the other PSU banks would be candidates to the large PSU banks. I'm talking about like an PNB or a BOI or BOB for that matter could be candidates who will be forced to acquire some of the weaker PSU banks because they really don't see them getting privatized. So that risk, obviously, some of these other PSU banks carry.
Okay. No, my apologies. There is Bank of Baroda in the list as well.
Yeah.
Now, let me come to NBFCs, Suresh. You know, the one that we got, Canfin, there you actually saw margins falling. Do you think this is a quarter, or even a year when banks will grow at the expense of NBFCs? Are NBFCs as good buys for you as banks?
No, not at all. I mean, if you look at it, today, Lata, the deposit growth in the system is running way below loan growth. And if you look at some of the LDR ratios of banks at this point in time, they're really at the peak levels, right? You're talking about 88, 89% for HDFC and ICICI, even others. LDR is almost to the limit that you can touch. So my point here is without an aggressive expansion of the deposit base, it becomes very difficult to get the loan growth. And therefore, and we are heading into a seasonally tough second half in terms of liquidity and the festive season coming in. It means that you're going to see further significant rise in deposit costs, which actually means the funding environment for NBFCs is only going to get tougher. You've already seen what's happening to the commercial paper rates, right? It's gone through the roof. The yield curve has flattened, and you are definitely seeing very tight liquidity conditions. In that environment, the NBFCs are going to face margin pressures. We do believe that the consensus is still very sanguine with respect to the margin expectations of NBFCs, and there can be downside risks from current levels.
Okay. Well, the one way of looking at the deposit growth not keeping pace is that a lot of FPI money has been pulled out. In April, May, June, it was huge. July, August replenished a bit, but again, September, we have seen outflows. These show as deposit falls in the banking system because the money gets pulled out. So should we worry so much about deposits? After all, banks seem to have enough unused, excess capacity in SLR and CRR, which they can draw down. So short point, the question is, can they improve margins even in Q3?
Okay, so if you were to really take a view on margins in Q3, definitely this got further tailwinds because remember, banks are asset sensitive, right? And we are very clearly arguing that the RBI is not going to stop hiking repo rates. I mean, they've already hiked by 190 basis points, maybe another 50 basis points, which will start flowing in Q3. And therefore, banks will continue to see margin expansion. But that is more got to do with the lead lag issue between lending and deposit rates, right? So the loans reprice faster than the deposit, and therefore you see an immediate tailwind coming to margins. My problem is not necessarily the FII flows affecting deposit growth. I don't think that's the main reason. The problem also here is because the dollar is strengthening. The Reserve Bank of India is forced to intervene heavily in the FX market. So they are actually selling dollars and sucking out rupee liquidity. And that's actually causing a significant proportion of what I would say pressure even on the overall deposit growth at this point in time.
I take your point. There is a liquidity issue, certainly, and the Reserve Bank stated policy itself is removal of accommodation, which is removal of liquidity. So that is going to happen. Okay, separately, you do expect margins to improve. What's the pick of the pack in the NBFCs? For you, it is second to banks, but would you still have buys?
Yes, so we are definitely positive on SBI cards at this point in time. So the way we are looking at is that the NBFCs which have pricing power and they run a very high yielding model. To some extent, you can even put Chola also in that category where clearly there is some pricing power in certain segments with the recovery in the commercial vehicle segment and stuff. So yeah, so it's better to stick with these quality NBFCs. Again, this could be more longer term rather than a shorter term tactical call. Clearly, with the rising rates, the preference is more towards banks, but SBI cards and Chola will fit our requirements when it comes to our picks in the NBFC space.
Not Bajaj Finance.
Sorry?
Not Bajaj Finance? I mean, I would have thought that would be in your list, no?
So we actually have a very counter consensus call of a sell rating on Bajaj Finance. We are of the view that obviously valuations are getting priced for perfection, and I think the option of them getting converted to a bank, which I think is just a matter of time rather than if it's a matter of when rather than if. The market is still not pricing, and at 7 times price to book, the market is very clearly indicating that they would never get converted to a bank, which we strongly disagree. So eventually, it has to get converted to a bank, which will dilute its return ratios.
Okay, yeah, that could happen also because I guess Bajaj Finance has nothing much to do with Bajaj Auto. The two managements behave extremely autonomously, so maybe it'll come. A final question on HDFC Bank, Suresh. What explains this continued underperformance even after what I would think are very good numbers? Is there still some worries with the merger?
Yeah, I mean, that is the single biggest point of concern. So actually, we had taken the HDFC Bank senior management on a roadshow about a month ago, and we met around 40, 50 investors across Singapore and Australia. And the single biggest question was on deposit growth. So let's look at the conundrum in this way, right? You're talking about HDFC Bank growing its deposit base at 19% this quarter on a YOY basis, and the loan growth was at 20 to 23%. So that thus takes care of the overall their own intrinsic loan growth requirement. Now you add HDFC Limited to the balance sheet. On top of that, you have to grow 20%. And on top of that, you have to replace the entire liability balance or a significant proportion of the liability balance of HDFC Limited, which means your deposit growth requirements are going to be even more onerous post the merger, right? And that's getting to be a big challenge at this point in time and a big worry in the minds of investors as to how these guys can sustain such super high levels of deposit growth when the overall deposit growth in the system is obviously very sluggish.
Okay. Yeah, I guess those doubts can persist. But I think there is that 7-year infrastructure loan rule which Reserve Bank put in, I think in 2014 or 15. So a part of HDFC's loans need not be treated for SLR and CRR is my guess. But I mean, we will have to work out the numbers when the merger actually happens and what the Reserve Bank tells them. What would your top buys be at the moment?
Yeah, so our top buys at the moment is clearly HDFC Bank, ICICI Bank, and IndusInd Bank. So these are the three top picks that we are pushing to the investors.
All right. Well, we'll continue the conversation after all the results are out. Suresh Ganapathy, pleasure speaking with you. Thank you very much indeed for joining us. The Bank Nifty has been cheering and is cheering even more after this chat, up 1%. And of course, the Sensex and Nifty up 1.2. We wind up bazaar with the markets on a very strong footing. Chartbusters will take the action forward.